What a beautiful animal. I wonder if it serves as the image of a fully fledged crypto ecosystem. Hello everyone, I'm excited to be back with you because this time we're going to dig deep into the Mad Meerkat ecosystem, and I hope you have some pretty durable shovels because we're gonna have a lot to dig. DeFi, yield optimizers, games, NFTs, they have everything. But before we begin, do you like superhero movies? I actually do, especially the Marvel ones. In fact, let me show you one of my favorite scenes in all of the Marvel universe.
Inevitable. And I am
not a financial advisor. What I express here is educational material in an entertaining fashion. My interactions with the crypto ecosystem are made to serve as an example in mechanics of the system, as well as case studies and not investment advice. Before you make any investment, do your own research. Mad Meerkat Finance. Interesting choice for a name. To start with, it is the largest ecosystem on Cronos. For those of you who don't know, Cronos is a fairly new blockchain implemented by the team behind Crypto.com. That means that whichever project manages to make an impact on Cronos will have a fair chance to make a partnership with Crypto.com, mostly because they too want to offer an ecosystem behind the usual exchange, so the decentralized world of Cronos might seem appealing for a large chunk of the customer base. It certainly worked for Binance, but the Finance team has plans to conquer all of the blockchains. In due time, of course. For now, and probably the next few years, they seem to focus entirely on Cronos, which is good because I see Cronos as still having lots of growing to do, and Finance can grow nicely along with them. So let's have a look at the general picture and then analyze each element properly. Mad Meerkat Finance is at the center of it all. It is a decentralized exchange that also serves as an automated market maker, and it has some staking farms and pools with some good rewards. Its utility token is, shockingly, MMF. Next up, we have Mad Meerkat Optimizer, which optimizes the earnings from Mad Meerkat Finance's pools and farms. Then comes Savannah Finance, a stablecoin platform along with Hakuna Matata, its younger sibling. Then we have MMETF, which is a decentralized exchange traded fund. Money is another stablecoin protocol which will be discussed in further details. Mad Meerkat Burrow is the main NFT collection, but they also have the Mad Meerkat Treehouse collection. These are very cool, precisely for their utility. Of course, there is also the games department, mostly in gambling nature, and, very important, there is also a launchpad. Let's start from the beginning. Mad Meerkat Finance. It is a very popular decentralized exchange on Cronos blockchain that is also an automated market maker. That means you can trade different coins on the Cronos blockchain and also provide liquidity for them. To put it simply, it is like PancakeSwap, but for Cronos. It also has a bridging platform powered by multi-chain. Its trading fees are of 0.17%, so that's great for newcomers who want to give it a shot without too many costs. Its utility token is MMF. It has a current market cap of around $60 million, a max circulating supply of 500 million tokens, and a current price of $0.2. Now, the script for this clip is written on 14th of May, which is very soon after the tragic crash of Bitcoin and other crypto. It is so soon that things haven't settled yet, and I fear there might be even worse outcomes for Bitcoin and the rest of the market. I plan on making a video to explain this too, but I want to wait in order to see the full development. In any case, it's safe to say that we are currently in a bear market, and MMF took a plunge in price of about 50%. However, if we look at the price chart, we'll see that what happened on 10th of May wasn't the only thing that affected MMM's price. In fact, it reached its all-time high of $1.7 in the beginning of April, and ever since then, it kept falling to the current levels of $0.2. It needs to be put into context though. According to DeFi Llama, in April, it had the highest total value locked, sharing with VVS Finance the first spot for the most total value locked on the Cronos blockchain. It was a tight race with both Finance and VVS Finance having around $1.23 billion Finance in total value locked, but now Finance is on the third spot with around $300 million total value locked. It might seem disastrous, but as you shall see, it still has lots of potential. I will not deny though that the price didn't perform as well as expected, even in the current market conditions of the last few months. The way I see it, it had a fair chance to drop to even lower levels simply because of the current market conditions, which don't seem to improve or even stagnate at the same level. But as long as the fundamentals of the project are solid, and I consider them to be, then the price will undoubtedly increase sooner or later. Most probably later. The utility of MMF is obviously for staking. You can stake it on the token pools or get it as a reward on farms. The returns on both the farms and the pools are good, but there are ways to enhance it, like the Mad Meerkat optimizer, which I will explore a bit later in the clip. I wish though that the farms and pools had a lock-in mechanism, where you lock your assets for a selected amount of time for increased rewards. You can also use MMF to buy the tokens released on the Launchpad, and I will talk about the Launchpad later in the clip as well. According to the team, the MMF token will be allocated in the following way: 1% for the Launchpad, 9% for partnerships, marketing, liquidity management and listings, 10% for development, and 80% for holders. Those 80% are further allocated in the following way: 80% in yield farms, 10% in staking pools, and another 10% in trade mining, which is not yet operational but will be soon enough. Finance has not one, not two, but 3 audits, as well as a bug bounty. Let's take them in order. First one is Certic, which shows no medium, major or critical issues, just a few minor ones and some informational ones which don't affect performance, but rather internal structuring. They haven't got Skynet yet, which shows a more thorough analysis. I don't know how much it costs, but for such a project that claims to be the largest ecosystem on Cronos, security is key in ensuring that enough institutional investors get on board. Slowmist is the next one, which, from what I can see, didn't audit Finance, but Optimizer, the yield optimizer, so we'll talk about it a bit later. Paladin did another audit, which shows 8 informational issues, 1 low one and another medium one, and although they've all been acknowledged, none have been taken care of. There is a secret auditor which doesn't appear on the docs but on partners, and even there, the link doesn't take you to what they have to say about Finance, but simply their homepage. I'm talking about Rugdog, a well-respected project analyzer. I don't know exactly how in-depth their analysis went, but they stated that Finance poses some risk, and the biggest red flags are that the token owner can dump, MasterChef is not under time lock, it doesn't account for transaction tax tokens, and whitelisted accounts can drain the holder contract. Finance's partnership with Rugdog isn't to be audited, but rather to review and check the identity of the whitelist candidates prior to listing. However, nothing that is stated by Rugdog has been addressed by the team. Finally, there is also a bug bounty program which offers up to $50,000 for any bug reported. Since we're talking about security, we have to take into account some recent news as well. In the beginning of May, quite a tragic month for crypto overall, right? It suffered an exploit worth $2 million. Simply put, it was a DNS attack where an attacker managed to inject a malicious contract address into the front-end code. I have to say that the Finance team handled it with professionalism. They quickly found the attacking address and gathered enough proof in order to contact FBI. They offered a deal where the attacker returned 90% of the stolen funds and they won't call any institution. Otherwise, they'll call FBI. In the meantime, they have reimbursed the addresses that lost money. In the end, the Finance developed its security protocols and implemented new strategies to detect future attacks. I'm not sure what did the attacker do in the end, though. Checking his wallet address, I can see he has roughly 10% of the sum that was taken off Finance, adjusted of course, for the current market status. If that's the case, I can only see it as a glorified bug bounty. Even the Finance team told the attacker, unethical as your actions are, we concede that there is a certain mad brilliance behind your design. However, even though it didn't turn out worse, this doesn't guarantee that future attacks will be less harmful. So I think that they shouldn't increase and, in some cases, rethink security only after attacks, but constantly during its operations. After all, they attack when you least expect. Also, I think that getting Certic's Skynet, or even another auditor's audit, as long as it's full and not some cheaper version, is a priority in appeasing institutional investors. Next up is Optimizer, also known as MMO, which is a yield optimizer for the staking programs on Finance. Usually the vaults in yield optimizers are of two kinds: a flexible one with lower rewards but that allows you to withdraw at any time, and a fixed one where you can withdraw only after a set amount of time, and depending on how large that period of time is, so are the rewards proportionally. MMO takes a step further with just one single type of vault, whose rewards are not linear but exponential. That means that the unit of rewards ready to be claimed is continuously growing, and the more you wait to collect them, the more its growth will accelerate. For example, if in a week you get a certain number of tokens as a reward, the next week's reward will be slightly bigger, and the next week's even slightly bigger, and so on. And once you claimed them, their acceleration will restart from zero. They also claim that if you plan to claim regularly in order to compound the LP tokens rather than its rewards, you will have a smaller profit than if you simply wait for the profits to grow exponentially. The platform also shows you the rewards you get based on how much you're willing to wait. In my opinion, this is a good combination between a fixed and a flexible vault, but I still wish I'd see some fixed vaults here. They are the best at storing liquidity over large periods of time, and during times of uncertainty when lots of people panic sell, I see the current version of a vault just as vulnerable for liquidity as a normal flexible one. Its token is MMO, which doesn't stand for Massive Multiplayer Online, but for Mad Meerkat Optimizer. It has a max supply of 5 million tokens. The protocol generally means 1 MMO for every 4 Crow they earn in performance fees, although this rate can vary based on MMO's price. It is a deflationary token, and this means that its minting decreases proportionally to its growth. Because of this, if the price gets to some large enough values, its minting might be so slow it might never technically reach the max supply, especially since right now they report a current supply of a bit over 1/5, which is 1 million tokens. The team plans to use 13% of all mints for development and innovation, and once the 5 million tokens threshold is reached, MMO will become a governance token that will continuously earn platform fees. The team also states that their main goal is to lock in at least $200 million in value on the Kronos chain, so because of this, they plan to abuse tokenomics by increasing the vault rewards, and from what I can see, they are to be trusted. However, its price tells another story. If we look at the chart, we can see it reached an all-time high in April of $1.7, only to fall to 0.2 in May. Obviously, it too was affected by the crash at the beginning of May, but it definitely didn't look good before the crash, so I wouldn't blame it at all on it. However, what does this chart remind you of? That's right, MMF's price, which shouldn't be surprising since they are so connected in the same ecosystem, and because of this, I see the same growth potential for MMO that I see for MMF too. As mentioned before, the Slowmist audit is for the MMO platform, and it does have 2 audits for 2 versions of the Vault contracts, which simply say passed, and an overall audit for MMO Finance, which says low risk. I will say what I said about Finance too. It's not dangerous. It's not a scam, it is in fact secure, but in order to achieve their potential, they must go the extra mile to convince investors of high levels of safety. Next up is Savannah Finance, which was so successful it already gained a younger sibling called Hakuna Matata. What is Savannah Finance? For those familiar with crypto, it's just another Tomb Finance. For those unfamiliar, let me explain in very simple terms. The main token is Savannah token, whose purpose is to be valued as 1 MMF, or as close as possible for as much time as possible. I say as close as possible because it takes lots of effort, especially in the token's early days. It's basically an algorithmic peg, but I'll try not to mention it as much since it's known to trigger PTSD. This token is not backed by any asset, whether crypto or physical. This is contrary to a collateralized stablecoin, which is indeed backed. For example, you can redeem any USDT you have into its respective sum in actual dollars. The main difference difference between these two is that if you manage to keep an algorithmic stablecoin on its intended value, you can create capital much more easily without having to back it with more assets. The reason why Savannah was created was to fix a problem, mainly the price volatility of MMF during the launchpads, when lots of MMF are used to buy tokens and are therefore burned, which leads to very sudden price bumps. Now, you might say that it's good to have such price increases, but unfortunately, you know the saying, what comes up must come down. The bumps are temporary, as many people dump, and even more, the price can even fall below the initial value. But even if it comes back to the same level, it's still not good, since it creates a lot of volatility, which affects further investments in the long run. This way, if the Savannah token manages to become a true stablecoin for MMF, it can be used as a replacement for MMF, since it's supposed to have the same price without the volatility of price. So, how does such a token manage to hold a certain value? This is what some people refer to as a seigniorage platform, and it is usually applied in slight variations from case to case, but they all have the same core mechanics. If the token is above the intended value, it is minted in a certain predetermined supply until inflation will reduce its price to its intended value. If the token falls below the intended value, people can buy bonds with that respective token. This way, the tokens used for buying bonds are burned, which causes the price to go up because of deflation. Once the token is above or equal to the intended value, the bonds will be able to redeem the token at the exact price they were bought. Only that this time, the respective token has a higher price, so it's a profit. In the case of Savannah, the algorithmic stablecoin is SVN, and it is pegged to 1 MMF. If it gets above the intended value, you get a part of the newly minted inflationary SVN only if you stake M share on their Oasis page, and you get M shares as rewards in the SVN MMF LP farm on the dessert page. If SVN's price gets below 1 MMF, you can exchange SVNs for M bonds and later on redeem them once the price is no longer under 1 MMF. As you can see, it managed to track MMF's price quite well, even though it could have performed better. In my opinion, if the total value locked over both protocols gets increased over time, SVN will perform even better. The platform is audited by Slowmist, which gave it another low-risk result. The certificate did say that they found 1 medium risk, 3 low risks, and 3 suggestions, and the team was actively working on them except for one of the low risks. Next up is Hakuna Matata, which does exactly the same thing. Seriously, it's the same type of seigniorage platform with the same principles applied to its HKN token. And HKN is not even pegged to another price, it's actually pegged to 1 SVN, so it's a peg of a peg. I tried documenting why exactly they considered there was a need for such a token, and what I could find is that it was funded through MM Finance's Launchpad, and the community even voted for it in a proportion of 99.4%. However, a closer look at the snapshot answered some of my questions. In an article written by MM Finance on their Medium page, they expressed their disappointment in how Savannah Finance performed, or better said, didn't perform. They didn't go into much detail. They simply said that the project was affected by FUD from many directions, as well as the market conditions of the past few months. They also blamed external projects that they tried to collaborate with, not naming anyone specifically, but they simply said they'll pursue such collaborations when they'll be bigger and therefore less vulnerable. This way, Hakuna Matata is aimed primarily at reducing SVN's supply so it can better match MMF's price. It plans to do that by creating a DAO to lock up SVN. There are no profits from this project except the community. There are also a few slight differences between HKN and SVN. For starters, you can boost its earnings with NFTs from their collections, which I'll talk about later. The rate of inflation is slower when HKN is above SVN in order to avoid huge price fluctuations. The SVN raised through this project will either be used for liquidity, locked up in DAO, or burnt. The team doesn't state in what proportions they'll do this, though. In this context, I can understand the need for such a step. I have to say that I appreciate them taking a harder but correct step in fixing it, rather than just stepping away and giving up. The sale on MM Finance's Launchpad was literally less than 10 days before writing the script, so they don't have any audits yet, although it would have been nice to announce any pending ones in order to appease investors. Still, I have to say I appreciate them reflecting honestly on Solana and coming up with a solution instead of just sweeping it under the rug. Since the token is so young, I don't expect it to perform quite well yet. At the time of this writing, it is more than double the price of SVN, but I'm not blaming anyone. 2022's May has been a rough month for all crypto projects, and such a young one is especially certain to suffer damage. I'm just going to wait and see how it performs in the future. Speaking of stablecoins, let's discuss another interesting project, MMF Money. After all, stablecoins are so reliable that there should be as many projects as possible. MMF Money is a platform that governs MUSD, which stands for MADUSD, and is a stablecoin. Apart from that, it also provides plenty of other crypto finance services, which I will just briefly discuss and go into full detail in another clip in case some viewers want. So let's talk about MUSD. What's the difference between it and SVN? As you shall see, plenty of them, but the main one is that MUSD is valued at $1, whereas SVN is at 1 MMF. Another major difference is what pushes MUSD's price to the intended value. Could it be a collateralized asset or an algorithm? If you answered either of them, you're wrong, because the answer is both. As the team says, MMF Money is the first hybrid CDP and fractionalized algorithmic stablecoin, and rightfully end the sentence with a what? To put it simply, MUSD uses two mechanisms of minting and stabilizing the price. The first one is CDP, which stands for Collateralized Debt Position. This means that you first put up a collateral, currently in the form of fully collateralized stablecoins USDT and USDC. In exchange, you get a certain percentage of that value in the form of MUSD. This is not a payment though, as you can return the borrowed MUSD afterwards and get your collateral back. Usually, if the collateral drops in value below a certain percentage, the CDP platform automatically sells it in order to avoid further losses. But in this case, the collateral is in the form of USDC and USDT, so it's impossible for them to drop in value. The second part of minting is not yet disclosed, or at least, I can't find anything about it. The team simply calls it fractional MUSD minting and says that users will be able to lock USDC and MMF tokens to receive MUSD. However, I couldn't find such a pool anywhere, not on MMF Money, not on MM Finance, not on MMO either. So, where is it, guys? Looking over all its features and utilities, I have to say that MMF Money is sort of a powerhouse, like MM Finance. However, the main difference is that it doesn't have them active yet. In fact, on a closer inspection, the only available operation I could find was the stable swap, where you can basically create a liquidity pool of either 3 or 4 stablecoins, DAI, USDC and USDT. In the case of 4 stablecoins, MUSD gets added to it. In addition to this, there is also a very interesting borrow platform which allows you to automate leverage. What does that mean? Let's consider the following example. You have 1000 USDC. You put it as collateral on MMF Money and get in return 800 MUSD. So you currently have 1000 USDC as collateral and 800 MUSD. That's pretty simple, right? But what if you converted those 800 MUSD into 800 USDC and then borrowed again for MUSD? You would have a new collateral of 800 USDC and 640 MUSD. This is on top of what you already had before, so you now have a total of 1800 USDC collateral and 640 MUSD. You can go even further with that. The only downside is that you must make a lot of manual operations, which combined will cost you a lot of gas fees. That's why the automated leveraging platform is so handy, because it optimizes the gas fees and time for doing this operation for up to 10 times. But why would you want to do this? Well, you don't actually give MMF Money USDC, but a receipt. Basically, you give another platform, Tectonic, USDC, and in return, you get tokens that act like a receipt which you can use to get MUSD on MMF Money. The thing is, is that on Tectonic, the USDC you deposit actually gets rewards of around 1.2% APY, but when you leverage it many times, you actually get this API of a bigger sum than the one you deposited. The team even gave a case example where they leveraged 10 times a sum of 1000 USDC with a collateral rate of 90% and got to a collateral value of 6,731 USDC. Don't get too excited though. Even if you leverage it 10 times, the API on Tectonic would still have a few percentages. Plus, there is a clear limit on how much collateral can be deposited on Tectonic, as well as how much MUSD can be minted. So not everyone will be able to do this if many will be on board. But it's not all that bad, since the collaterals are stable in value and therefore will not decrease at all over time. Apart from these two, the team has pointed out many other AMOs, meaning algorithmic market operations, which are just as interesting. First off, they have a utility token called Borrow, which you can currently stake, and its utility is linked to what I'm going to explain next. It does have a buyback and burn mechanism though, and it is also used for governance. They have things like collateral investing, which invests the assets held as collateral into flexible, reliable pools, mPool, which is a stable swap pool with protocol-owned liquidity, which aims to tighten MUSD's peg and also add further utility to MUSD and the collateralized assets, as well as collect admin fees for Borrow holders. Continuing our list, MMF Money also has a collaboration with Single Finance, which is a lending platform. Basically, they put MUSD on loan there in order to generate interest for Borrow holders. They also have a mechanism to lend MUSD not just to lending platforms, but also to DeFi platforms, and the profits generated this way to be used as part of the buyback and burn mechanism. As you can see, MUSD has had a rough journey, but if you look closer at its price, you'll see that it's not as volatile as you might think, since it fluctuated between $1.006 and $0.992. That's actually a good performance, especially for a project so young, so I'm hopeful for the future. You're still with me? The next important element of the Finance ecosystem is Meerkat ETF, or simply put, ETF. To put it even simpler, it is an ETF. What's that, you ask? It's an exchange-traded fund, basically a set of assets that act like a mutual fund, only that in this case, this fund is operated on a decentralized exchange, hence the DTF term coined by the team, which stands for DEX Traded Fund, and they claim it is the first of its kind. ETF is backed by a set of tokens, mostly from Finance ecosystem, like MMF, and also LP tokens like METF, MMF. Just like MMF Money, I will take a page out of Transformers book and say that
there's more to them than meets the eye.
So, they have elaborated explanations for every element of the strategies and market dynamics, which I will not go into full detail now, but as always, I'll do it if asked nicely in the comments. I will go now over just the basic stuff, which is the following. METF is the token which represents a share of the total assets under the fund. You can get it in two ways. The easiest one is to simply buy it from Finance and then stake it on METF to earn some more. A little more advanced one is to buy bonds, which over time will give the user METF at a slightly bigger rate than what it usually is. So, for example, in an extremely hypothetical case, 1 MMF is equal to 1 METF. So if you have 100 MMF, you can exchange them on Finance for 100 METF anytime you want. For the sake of the case, we ignore gas fees. By buying bonds, however, you pay 100 MMF now, and in a few days, you get slightly more METF than you would usually get. Maybe 103 or 105 or even 120 in some cases. It depends on a lot of factors. I do mean a lot of factors. Its price has had a huge pump, followed by an equally huge dump, and I do mean huge. The price first found some stability at around $83, then pumped all the way to over $336, only to then go down fast, but then slower to the current value of $10. However, the team has addressed this situation already, stating that speculators will attempt to determine the fair value of the ETF, performing buys and sells. NFTs. The reality is that because METF is launched as a cryptocurrency, low or lack of liquidity is what results in high volatility. They also note that the price of METF becomes irrelevant in the long term, as the balance will grow exponentially over time thanks to the power of compounding. They even give an example. Let's say you buy a METF for $400 now, and the market decides that in 1 year time, the intrinsic value of METF will be $2. Assuming a daily compound interest rate of 2%, your balance would grow to about 1,377 METF by the end of the year, which is worth around $2,754. That seems cool, but the pools don't have a daily 2% return, but 0.6 for the single pool and a bit over 1% for the LP pool. Still, it does have a good return, and conceptually, it still makes sense to buy now more expensive but have more time to accumulate staking rewards, rather than buying later but have less staking opportunities. The staking rewards are exponential, which means that each day the rewards increase by a certain percentage until they get more aggressive, but that will happen only after about 300 days. Good old NFTs. You can't have a crypto project without them, right? Finance ecosystem currently has 3 NFT collections. First one is the original Mad Meerkat with a volume of 34.8 million CRO, floor price of 7,900 CRO, and 11,000 cells so far. This one actually acts as an expansion to a previous collection on Ethereum blockchain, which uses the same pictures but has only 777 items instead of 10,000. As you can see, their inspiration is clear, but at least they don't try to hide it. The second one is Mad Meerkat Treehouse, which, although it has been released after the first one, it gained more financial success. I say this because it has a volume of 35.2 million CRO, a floor price of 9,950 CRO, and 5,400 cells so far. Their style looks like it's made to complement that of the first collection, so that's nice. The third collection is Mad Meerkat Degen, which continues the look and style of the first one. Being the most recent, it has a volume of 5.8 million CRO, a floor price of 6,300 CRO, and only 655 cells so far. They look exactly like the name suggests, degenerates, perfect for the crypto world, especially for those mad about NFTs. Each one of these collections has 10,000 NFTs. On top of that, Degen also has 10 legendary NFTs, of which 2 will be owned by the team and 8 will be auctioned. I have to admit that when I first saw them, I instantly thought they're just some BAYC cheap imitation. And while they do seem like they plan on walking in the steps of BAYC, which, by the way, is fine since it attracts a unique niche of investors, their primary role is that of utility, which is boosting the pool gains on Finance, Optimizer, and other such DeFi protocols. Basically, you'll see that the farms and vaults have certain boxes where you can stake the NFTs. The boosts differ depending on the platform, but generally they make up a few percentages. They also state that you can do this on METF too, but I didn't see it implemented over there, so I don't know. Treehouse has a separate official site where you stake your NFTs. They don't boost any other staking pool, they are the pool. By staking one Treehouse, you gain 1 MAD per day, which is their utility token, and you can also boost the staking with the original Mad Meerkat collection, which will earn you more MAD. This utility gives the NFTs a stable floor price that can increase exponentially alongside the whole Finance ecosystem. Speaking of MAD, which is also known as MADbucks, it is the utility token that was created in order to stabilize the whole NFT ecosystem and easily integrate future projects. It doesn't have that much utility yet. It is used for a game which hasn't been launched yet, and to mint the latest NFT collection, the Degen Mad Meerkat. However, they do state that the primary reason is to future-proof upcoming partnerships. There are always complications to integrate new projects that use another infrastructure. In a way, it's like a country having multiple currencies, so If every new NFT project from their ecosystem starts with the same fundamentals, it's much easier to interact and communicate on the long run. Its price is currently around $4, although it has peaked above 20 a few times in the past. It also has a market cap of around $15 million. Like it's the case for the other tokens, I still think it's too early to judge, especially in the current market conditions, so I'll just give it time. As I said earlier, they plan to make a play-to-earn game integrated on their NFT ecosystem. It plans to use another token called MMG and be in some sort of in-game currency, and it will basically be about sending your meerkats to battle, leveling them up, and advancing their stats. You will also be able to fight other players. Even though that game is nowhere being finished, the Finance ecosystem already has 2 game platforms implemented, which both revolve around gambling. This way, they're not as elaborate as the play-to-earn game described earlier, but they're still interesting nonetheless. Let's start with the Croissant platform. Great name, and I do mean it. These guys, although their project is still in its early stages, has some great potential. The primary reason is that it's gambling, and over the whole crypto ecosystems, I haven't seen a fully developed, enriched and popularized gambling platform with a huge market cap. And this is crazy. Outside of crypto, gambling is big everywhere. You see it in ads, displays, commercials, banners. Regardless of how strict a country regulates it, there are still huge investments made into it and profits to match them. The internet has made it even more accessible, and considering that authorities don't bother online gambling as much, you can only imagine how much money flows into it. So where is it in crypto? Of course there are some platforms, but nowhere near the scale of what I said before. I would have expected crypto to be full of them already, since people lose money anyway, and therefore might want to lose them in a rather fun and assumed way. But crypto is still in the same stages that the internet was in late 90s, so I have patience. The same can be said about the adult content, but that's a discussion for a whole other clip. Coming back to Croissant Games, it claims to be better than traditional gambling because of a number of reasons. Let's check them out. First of all, they are open source and use smart contracts, which means they can be reviewed anytime, and this guarantees that there is no special secret feature that will make you lose if you want too much. Even better, you don't need to pay gas fees to play the games. They use a gasless model, which I don't know that much about, but as long as it removes gas fees for users, that's fine by me. They are open to anyone, just like any other DeFi, so anyone from any country can join, and they also don't need to open deposits or anything like that, just your hardware wallet. They also have a utility token, rightfully called Croissant. This token is for holders in order to receive 50% of house profits. You can also stake it and boost the staking rewards with the aforementioned NFTs. Its market cap isn't so big, it's not even $500,000, but on the plus side, its emission rate is reduced by 2% each day until it reaches 10 croissant per block, and that's something considering it started at 100 croissant. The cool thing about this token is that it is a reward for bets. However, it's not for winning bets, but losing ones. More specifically, when you make a bet and wager a certain amount of croissant tokens and you win, you earn the multiplied amount in those same tokens. But if you lose, you still get 0.5% of the waged amount in croissant. It's definitely not a lot, I know, but it's stuff like this that shows me the developers are truly looking for any way possible to add utility, and this in turn gives me confidence. They currently have 4 games: Coin Toss, Crow Roll, Dice Roll, and Roulette. However, at the moment of the script's writing, only Coin Toss was available. They have maximum payouts that range from 1.98x at Coin Toss all the way to 34.65x at Roulette. Even more, the team does specify in their roadmap that they plan to have a total of 10 games. They also have an audit, and this is precisely what I said I wanted to see at other projects from Finance. They show pending audits. It's not yet finished, but simply showing that it's in progress and will be finished sometime in the future gives the community peace of mind, and in this case it's Certic. It still depends on what the result will be, but for now it's a good sign. The next significant platform is Gamplify, a DAO with OM features that is centered around sports betting, and I have to say that this one too has some pretty cool features. But let's start with the DAO part. A DAO is basically a decentralized autonomous organization, and to put it in the simplest way possible, it's just a community where people can vote in regards to its policies and development, but there is no higher authority to interpret, process, and maybe even change the voted direction. There is just a code that will do precisely what the community is voting for. For example, there are many cases where a politician claims to be the voice of the people and he or she gets elected based on a political agenda. However, once elected, the person in charge might act based on other interests as well, therefore having to tone down on the campaign promises or even completely ignore them. In contrast, no matter what the community votes for in a DAO, it will act exactly that way, hence the term of decentralized autonomous organization. As a matter of fact, on the 23rd of May, GambleFi is set for a vote on whether to focus on other blockchains too, or continue 100% with Cronos for now. I also said it has some OM features, making it an OM fork. For those who don't know, OM is the central token on Olympus DAO, one of the prime examples of DeFi 2.0. DeFi 2.0 is a trend in DeFi protocols that appeared in 2021 and which had a similar impact that Web 2.0 had over its first iteration. It simply added new principles of conduct in order to switch it from being a B2B operation to individual-oriented. In other words, while DeFi 1.0 was successful mostly for whales and institutional investors, DeFi 2.0 is centered on bringing general people like you and me on the stage, and this is crucially making people adopt crypto in general. What are the values planned to attract individuals to DeFi 2.0? To be honest, it's basic stuff like increased security, transparency, accessibility, but an interesting one is the staking mechanisms, whose rewards depend heavily not just on how much you stake, but how much the whole community stakes and, more precisely, how long the community holds the assets without withdrawing. The more they stay, the more each one has to win. Olympus DAO is one such example, and on top of that, it acts as a decentralized reserve currency that can propel other DeFi projects and create its own ecosystem. But, as always, if you want me to do a deep dive into it, let me know in the comments below. Coming back to GambleFi, it is an OM fork, meaning its code copies a majority of Olympus DAO's code, but it adds its own spin in the form of, you guessed it, sports betting. GambleFi actually has two platforms. The first one is GambleFi, of course, which is centered around the financial part, mainly the DeFi protocol. This way, it gives you access to staking, buying bonds, boosting certain rewards with NFTs. The NFTs are not part of the Meerkat ecosystem, however. In fact, there are two staking mechanisms, one which is similar to the one in Olympus DAO, and another one which is simpler in nature. It simply shares the revenue based on how much you stake. Interestingly, there is even a third staking mechanism where you stake in order to earn traditional sports-related prices like tickets to events, subscriptions, and so on. However, the prices aren't guaranteed. It's only a raffle, but a cool one, and the first such case I saw implemented in a staking mechanism. The magic of betting is happening on the second platform, Chrono Sports. The first and most interesting thing I noticed here is zero-loss betting. It means exactly what you think it means. You bet a certain amount. If you win the bet, you obviously win a sum. But if you lose, the sum you wagered goes back to you. So basically you can't lose, you can only win. However, as you might expect, there is a catch. The odds aren't that great. If you look at the past bets, you'll see that there is no bet whose rewards exceed 1.6x, the biggest one being 1.55x. The team actually explains why the rewards are not so big. Basically, all of the accumulated wagered tokens are staked in some other DeFi pools, mostly on Finance, in order to gain as many rewards as possible in a short period of time. And that short period of time is 7 days, meaning that you can't bet on an event that's going to happen in less than a week. This way, at the end of the staking period, the protocol distributes the earnings to the winners in such a way that the losers don't lose and the winners win less. It's also because of this that the rewards are bound to change, depending on the factors of the system I've just just explained. I'm not complaining though. This is a great way to get people on board and prove crypto's utility by showing them a cool application of decentralized finance. One thing I'd complain about, though, is the lack of bets for now. At the time of writing, there have only been less than 10 bets, but the team has addressed this, saying that they currently aim for 3 to 5 matches per week in order to make sure that the total value of tokens wagered is enough for each bet. In time, as the platform will grow and therefore so will the total value wagered, the team will be able to implement more bets per week as well as more types of sports, since until now there have only been football and UFC matches. Now let's come back at the DeFi part of it and talk a bit about the token called Betify and backed by the GambleFi treasury of assets. As you can see, it had some tough times since release. It looks like it was dumped from the token cell and then slowly lost its value until it stabilized at around $0.6. Its market cap is $200,000, which I have to say is a bit concerning, even if we're talking about a young project and the market took a serious plunge. Excuses can be used up to a certain point. It's still not completely lost, but it looks like it's close to it, so I'd keep my eyes on it. For those who just want to stake, you can still gain value since it's early to join, and therefore the staking rewards will outpace the price's fall as long as the project survives in the future. One thing I appreciate is that it implemented the staking within staking feature that many other OM forks have implemented. To put it simply, you first stake Betify and you receive the same amount of another token called BetSlip that acts as a proof of staking. Well, you can also stake this BetSlip by receiving shares of the treasury revenue, meaning you earn twice for the same staking amount. Did you listen to me all the way to this point? Did you have time to watch and patience to process everything I've said? If your answer is no, which I agree is most probable, just know that I've covered roughly 50% of the main ecosystem that was released on the launchpad, and if we are to take into consideration other partnerships that came along, this clip would have rivaled Peter Jackson's entire uncut filmography. What I'm trying to say is that the Finance ecosystem is truly a beast, and its most powerful elements have been released on its launchpad. It currently released 14 projects that implement and deepen the ecosystem by not only using MMF, but also other projects' utilities if such a case occurs. The process is pretty straightforward. You simply commit tokens and get in return a percentage of the tokens allocated by the team, and this percentage depends on how much you allocate as well as how much others allocate. There can also be an overflow in case people commit too much, in which case you get part of your allocated tokens back. In the first few projects people could allocate MMF, but I'm happy to see that the last few projects had SVN allocated instead of MMF, which means they've already reached the main goal. Looking at this whole ecosystem, I wish I left it for some later clip instead of choosing this huge task for my very second clip on this channel. In any case, I'm glad I got to learn more about it and share it with you. My take is positive, I'm hopeful about it, and I have to say I see some strong potential in it. Obviously, I am truly in awe of how the whole ecosystem works and how each element thrives by interacting with the other ones. It has all kinds of DeFi protocols, NFT collections, games, betting systems, and they are constantly building and adding value. They even have lending, which I haven't even talked about. My point is, this is one of the few examples in crypto that is greater than the sum of its parts. I personally think that, given enough time and effort on the team's part, this can become a truly popular experience not only on Cronos, but the whole crypto market. I even see a potential partnership with Crypto.com. Since they are so eager to gain a boost in everything related to crypto, why not promote Cronos' DeFi landscape as the extension of their exchange? Sort of like a Wild West that spans beyond the security of the city, that is filled with gold ready to be found. I can definitely see Finance able to deliver on such a promise. However, I do think they have a long way to go from being perfect. I think the main focus of the upcoming months should be security and stability. I feel like I didn't see enough audits, and when I saw, it looked like they used cheaper versions or cheaper audits, and the projects that lacked audits didn't say whether they have any in progress, with a few exceptions, of course. This is the main obstacle in the way of general adoption, and I think this was also reflected in the price. After all, there's no point in developing if you don't secure what you've built. Another thing I'd like to point is that the user interface lacks responsiveness. I generally use the Brave browser to access crypto dApps, and I was a bit surprised to see that they took more time to respond than even Chrome. The design could also use some professionals to make it more appealing to general users. Overall, I am still optimistic about its success. All I'm saying is that they could afford to focus a bit less on developing now and a bit more on securing what has already been built, but still keeping developing as its primary focus. Now, I also plan to invest roughly $50 into whatever project I'm covering. In this case, it would mean investing 10 cents into each and every pool and token available on the ecosystem, so I'd rather just choose one pool. This time, I'm choosing GambleFi's Ohm Fork staking, which gives me the possibility to stake twice the same amount. It's not based on any defining factor, as I consider them all to have a good potential and high rewards for now. It's just that I'm currently fascinated by this kind of DeFi protocol. So, as a small tutorial, here's what I'm doing. And by the way, let me just repeat that I'm not a financial advisor. I'm simply showing you guys the mechanics of the process. When people say that crypto is like the Wild West, it really is, including the exchanges. You see, to simply put some CRO on my wallet address, I have to use 2 exchanges. The reason is simple. I can't pay crypto by card on Crypto.com, so I'm using another exchange. In this case, KuCoin. However, if I withdraw CRO on KuCoin, it can only do so on the Ethereum blockchain, not Cronos, which doesn't help me at all. So my solution is to buy Algorand on KuCoin, transfer it to Crypto.com, exchange it for Bitcoin and then CRO, and only then can I withdraw it on my personal wallet address. As a side note, they have an absolutely horrible rule which says that you have to wait 24 hours to withdraw to a wallet that you have just added to the withdrawal list. That might seem very nice and secure, if not for the fact that they force you to authorize the withdrawal using, among others, a code sent by SMS. For those of you who don't know, this is the least secure way, since SIM cards are very easy to duplicate. What I'm trying to say is that they make me wait 24 hours for nothing. Rant over. Also, the reason I got Algorand is because the gas fees for the transfer between exchanges are around 40 cents. In any case, after all that hassle, I now have 485 CRO. What I did next was exchange 290 of them, which is a bit over $50, into Betify. I was able to do that simply by going to the exchange and selecting Betify from the list. Then I exchanged, which gave me 203.264 Betify tokens. I then went on to GambleFi.io, their official site, and launched the app. I added the tokens on MetaMask using the Betify button, and then on the stake page, I approved the staking operation. Only then was I able to stake Betify. But, surprise, there is a warm-up period of 3 rebases before you get the bet slip needed for revenue share. In other words, you have to wait 24 hours before you can get the bet slip that reflects how much you staked. You are still earning rewards for your staking, and you can withdraw anytime you want. However, if you withdraw in the first 24 hours of staking, you will not receive any rewards. The next day I was away, so I waited for about a day and a half, and during this time I gained 2.9 Betify, which is about 40 cents. I'd say that's fair enough. So next I claimed it all and moved it to the main staking platform, meaning I staked a total of 206 tokens. In return, I got the same amount in bet slip, which acts like a sort of receipt that you can stake in the second pool. So what I did next was wrap the bet slip into WBetSlip. It simply meant I exchanged bet slip into WBetSlip, giving me a bit over 63 WBetSlip, and I did so because you can only stake WBetSlip into the pool. So then, the last thing I did was simply stake the WBetSlip into the revenue sharing pool. There are 2 things to take note. First of all, when you go through this process for the first time, you will have to approve some operations first before actually doing them. This applies to most staking pools, wrap protocols, and other such things. It's no problem though, they literally cost a few cents and you only need to do this once. The second thing is to make sure you understand the mechanics of the pool in which you're staking. Even though they all have the same principle, each one has its own intricacies. In our current example, the WBetSlip is locked for a period of 7 days, meaning you can unstake only after these 7 days have passed. In the meantime, you can earn rewards. However, you have to manually stake them, and each time you do that, your WBetSlip is locked for 2 more days. Since it's an early project, you have to manually claim it. If everything goes well, in time they could automate this process, or maybe a yield aggregator like Beefy Finance might make a vault with their stake in. Time will tell. Thank you guys for making it this far with me. It would really help if you did the usual. You know the drill. Subscribing, liking, hitting the bell notification, commenting, but only if you think I deserve it. I truly hope this clip was informative and entertaining, and if you have any observations or suggestions for upcoming projects to cover, feel free to write them in the comments. If you want to disagree or correct something I said, please do so in a civilized manner. Until next time, stay sane and safe.